Most people think debt is what keeps you broke, but for the wealthy, debt is what makes them richer. In fact, the richest people in the world don't live off of income, they live off of loans. And somehow they pay less taxes than everybody else. They keep their assets and they get richer over time. So, how does all this actually work? And more importantly, why does the same exact strategy seem to destroy everybody else? That's what I'm going to show you in today's video. I'm literally going to break down how the wealthy actually use debt, why it works for them, why it's going to work for you, and why it fails for most people. So let's start with how most people actually use debt. Most people borrow money to buy things that go down in value. Things like cars and credit cards and lifestyle, and then they pay it back with after-tax income. So just think about what's actually happening. You earn money, you pay taxes on it, then you pay interest on top of that. You're literally getting hit twice, sometimes three times. For most people, debt is backed by their job. If your job stops, everything else falls apart. That's why debt feels really stressful. That's why it feels risky. And that's why people keep getting stuck. But I remember mentoring a guy who had a thriving business as a small business owner. He really didn't have a business, to be honest with you. He essentially was the business. He went from making about $700,000 a year down to $100,000 a year and couldn't sustain his lifestyle. He kept piling on credit card debt, personal loans, home equity lines of credit on his primary home. Just not a good situation. He used debt the wrong way. Now let's actually flip that, because this is where everything changes. The wealthy don't borrow based on income. They borrow based on assets. And that's what we really need to understand. So a normal person might say, I need money to buy something. A wealthy person says, I already got the money. I just don't want to sell my assets. So that's a completely different game that they're playing, because now the banks aren't just looking at your job or your small business, they're actually looking at your balance sheet. So let me just make this really clear, really simple for you. Let's say someone has $10 million in assets, whether it's stocks and real estate businesses, and they go to a bank and they borrow 2.5 million. That's only 25% of what they own. To the bank, that's extremely safe. So what happens? They get lower interest rates, they get better terms, they get more flexibility. And here's the part that most people don't actually realize. That $2.5 million is not taxed because it's not income, it's a loan. So now they can use 2.5 million to live off of, to invest, to buy whatever it is they actually want, while their $20 million in assets are likely just going to keep growing and growing and growing. Now they're living off of borrowed money while their real money keeps compounding. Now here's the part that sounds crazy when you hear it the first time. The wealthy don't actually take these loans with the intention of paying them back like most people do. Instead, they just keep refinancing. So when a loan comes due, they take a new loan. They pay off the old one and they continue. Why? Why do they do this? Because the alternative is selling assets, which they don't want to do, they're not going to do. And when you sell off assets, what's the worst thing that happens? You trigger taxes. So why pay taxes today when you can borrow cheaply and let your assets just keep growing? Think about it. Over time, those assets are going to go from what, 10 million, 20 million, 40 million dollars. Now they can just keep borrowing more and more and more, basically at the same ratio, and they just repeat the process. Now, this is where most people actually get confused. So they hear this strategy and they think, I'll just use debt the same way. Well, hold on, my friend. This only works if you already own assets. Those assets are growing and you borrow conservatively. So if you try this without assets, then you're right. You're not leveraging, you're going to start drowning, which is what we see all the time, don't we? So here's really the key lesson. Debt doesn't make you rich. Assets do. This whole game is about seeing how many assets can you stack. So just zoom out for a second. Most people use debt to consume. The wealthy use debt to avoid selling their assets. That's it. That's the entire strategy. They keep ownership, they avoid taxes, and they let compounding do the work. That's the side of the game that we want to be on. So the game isn't actually to eliminate debt. The goal is to build assets strong enough that the debt starts to work for you. So if you've enjoyed this video, then watch this video next. And if you haven't yet, click that little subscribe button to join the channel family here. And let me know if you have questions that I can answer on future videos. And until next time, stay with me. No lazy money.